So on the live yesterday, I mentioned that I have about five or maybe even six different sources of funding that are available right now that I want to walk you guys through. So the first one today is CDFIs. Now, with each one of these, it's basically like, okay, looking at where a lot of the money is going, where the money is sitting, and how to get access to it so that you can close deals. Typically, I'm not a big fan of doing a ton of debt on these micro private equity type of deals because the risk is a bit higher. We will read about high leverage LBOs in larger businesses. And as we know, a lot of those will not go well. Toys R Us is an example, Six Flags is an example, Sears is an example. There's a lot of examples of large businesses that are staples in the culture of America, and in some cases the world. They end up going by the wayside or having to file bankruptcy, having some issues because they get into trouble and they have a ton of debt that they load up on. So when it comes to doing these small deals, that's something to be wary of. Now, I didn't talk a lot about leverage because as we got into the last 10 years of a bull market, it got to the point where the multiples were just too high and it was too risky for you to go out, take debt. And unfortunately, I've seen a lot of those businesses come to market this year that sold last year at high multiples. People took out SBA loans and now they're upside down on the business they got into. And today we're in a different market. In today's market, you can go full force into accessing debt to close the business that you want to buy because even if things go wrong, you should have enough room between where you buy the business and where the debt coverage might be affected if things go badly. Now, obviously, that goes without saying, you have to have a good due diligence process, et cetera. So let's talk about CDFIs. One of the reasons I love CDFIs is they're actually nonprofit. So these aren't commercial banks. It's not your local small bank. It is just nonprofit organizations that essentially are there to provide funds to small businesses. A lot of times you'll see them, they'll go after a particular community. It may be to serve a particular purpose, and they'll have a mission statement, and you'll be very clear on if you qualify for that CDFI or not. One of the largest, and this is one that anybody can apply for nationwide, is Axiom. And they have some awesome programs. It's actually the requirements on the face value is really, really small. And the real work comes into putting together the application, putting together the business plan, and having a business, in our cases, that is profitable. When you get into startups, it's a little bit tougher to get. So what are some of the differences? When you're going and you're getting just a commercial loan, the key is those people want high capitalization. And once you have a bunch of cash already, which is like, if I had a bunch of cash, I might not come to you to borrow. They want you to have amazing credit. They want you to have the backing of some assets. And they want you to have a super long history. And so all those things combine to say, okay, this makes it difficult for the average person who's acquiring a business to use the commercial banking. So when it comes to the nonprofits, the CDFIs that, I want to encourage you guys to go after, in a lot of cases, these are funds that are, first of all, donated because it's a nonprofit. In other cases, foundations will actually loan to the CDFI at zero rate of interest. And this becomes a really cool deal if a foundation wants to have an impact and they don't want the money just to be spent and go away. This is an amazing way for them to still have an impact and be able to have that money be used over and over and over, even if they're not earning interest on that. Now, let's get into the criteria for you, the borrower. One of the things that's amazing is their minimum credit score is 575. Shout out to all of the entrepreneurial folks out there with bad credit. A lot of times, when you're an entrepreneur, you go out, you try to get money wherever you can. You're borrowing credit cards up to the limit, blah blah blah, and you end up in a situation where your credit isn't that great. So that's a really cool benefit. The other thing is they don't want any bankruptcies. They don't want foreclosures. So that's something to watch out for as something that would count against you. So what's the biggest hurdle here? If you don't have assets that are required, the credit score isn't high, what are the big hurdles? It's a ton of paperwork. Now, for us as business buyers, if you're doing due diligence, a lot of the paperwork that you're going to need are things that, at the end of the day, you should be collecting as a deal maker anyway. So you can bring these deals with all the paperwork that you already have and almost overwhelm them because the average small business person is not coming to the table prepared. The other thing that they want is a business plan going forward. So, you're gathering all the paperwork for the past. They want at least 2 years of revenue, which helps so you don't get into that startup category. They want to make sure that you've got enough income to have debt coverage. So what they're going to look at is what's the total amount of expenses that you've got? What's the total amount of debt that you're going to have to make payments on a monthly basis? And then how much money do you have left over to make sure that there's a big enough cushion there? So that's important. When it comes to your cash, it's similar to SBA, and in fact, a lot of what Axiom does is SBA type loans, and they want basically you to put up 20% of the capital. So those are the big points here. You can check out Axiom. I'll put the website below so you guys can check that out, as well as some of the other places to do some research about what the requirements are. And I'd love to hear from any of you that go through this process. I have helped, actually done 2 deals where we use other CDFIs that were local in the city. And so that's something to check out is who are the CDFIs that are specifically targeting your market in your town, because a lot of these most of them are not like Axiom. Most of the CDFIs aren't national, huge, multi-million dollar entities. Most of them are just small deals. We did a deal in Tennessee with one. I'd be surprised if their whole portfolio was larger than 5 million. If they had a whole portfolio larger than 5 million, I'd be surprised. I think the deal that we did with them was a total about 300,000. And the paperwork on the front end is a lot. And I know my client in that particular deal, there was ongoing monthly paperwork. And it's really interesting because I was an investor in business, and it was kind of cool because it forces you to invest on a monthly basis. You've got to invest the time basically to put together all your paperwork, because in the case of that CDFI, they required the business that took out the loan to put together pretty extensive reports on a monthly basis. So that's something that I liked about it as an investor in the deal. But something for you to be aware of if you're the borrower is that, there is the front end paperwork is pretty high. There's a lot of requirements. And then the back end paperwork also is a lot of work as well once you get the loan. Hope you guys got some value out of this. Let me know if any of you end up going after a Axiom loan. Thanks.